My name is Mads Christiansen. I'm the fund manager of NewDeal Invest. NewDeal Invest is an investment fund that does long-only investment in public listed companies. We are long-term investors in tech leaders in e-commerce, digital transformation, and gaming. We offer a consumer-centric investment product where we totally align our interests with those of our customers. Thus, we only charge fees when we perform, meaning that the management and the first 7% yearly return is free of charge. For us to build a business on our capability to outperform the average return of the market, we have to be confident that we can achieve this. And we are. So here's what we do. We invest in growth companies. We have a special skill set in digital companies, and our core competence is within e-commerce, digital platforms, and gaming. We leverage our insights in digital business models to choose the digital companies that will continue to grow rapidly for many years. In a perfect market, the growth potential of these companies should already be priced in, but it is not in many cases. And I think this is the case for several reasons. First of all, because of the current accounting practices that are having a hard time handling intangible assets, which is the primary value that our companies build. And thus, classical thinking stock analysis have problems using their existing frameworks for valuing these stocks. Second, this framework also contains some assumptions about companies that might not apply to digital companies. An example, that company growth slows down with size. I don't see that applying to digital companies. Our focus is the future. We invest in innovation, predominantly digital innovation. Innovation is oftentimes disruptive and transformative in nature. This means we have to be open-minded and imaginative about the future. Some markets are actually being created by the innovative and disruptive businesses we invest in as we go along. A good example of this is the smartphone. Think of the enormous amount of business that is enabled via the smartphone. To have recognized the potential of the smartphone early has only been possible for investors imaginative enough to envision all the business opportunities that arose with the smartphone. The takeaway from this is that if you evaluate disruptive companies based on the world as it is today, you will misunderstand them. Thus, the bulk of our thinking and our analytic work is focused on the future, trying to envision the new businesses in the future. We call this underwriting the future. This thinking is the opposite of classic value investing, which is based on the past and present performance. We call that underwriting the past. Being long-term investors, a lot of our time is spent monitoring the performance and news flows of the companies that we are invested in. Thus, we have over time become specialists in these companies and the segments they operate in. This gives us an edge compared to investors that are spreading their investments over very different business types. We allocate a lot of efforts in understanding the future. We spend a lot of time following alternative data, researching and discussing trends, new technologies, and individual companies. We're constantly trying to keep our knowledge at the edge of the thinking about the future of businesses. We are very open and transparent. We share knowledge and thoughts with a lot of investors, which means that they share their ideas and knowledge with us. I personally spend several hours every day on video calls or texting with fund managers and skillful individual investors all over the globe, sharing and discussing thoughts, news, and ideas. This is a very powerful research tool that enables a small but skillful and visionary team like ours to be at the forefront of thinking about the future and digital disruption. I think collaboration is disrupting the old information channels and is becoming the most powerful and cost-effective research tool there is. Our fee structure is designed around what we believe in. We believe in long-term investment and in our ability to outperform the stock market consistently. We charge 5% when you enter as a one-time fee And after that, management is free and we don't charge performance fee until your return is higher than 7% cumulative aggregated growth rate. When your return is higher than what corresponds to 7% yearly, we take 20% of that excess return. In other words, once you have paid for entrance, you only pay us when we have beaten the average yearly market return. So we only charge you when we deliver to you what you trust us to do. First and foremost, you should choose us because we are investors ourselves and we have aligned our interests with your interests. It is simply different when you have skin in the game yourself. And our network also has skin in the game. And I tell you, they are sharp and skillful. And they collaborate with us because we are sharp and skillful. Next, I would love it if you share our interest for the future and our visions of underwriting the future. Then it could be that investment interests you and you would like to be a part of our network, collaborating and learning as we go along. We are very open and we interact as much as possible with our investors, making this a learning journey. I am the fund manager. I made e-commerce, the gaming industry, and digital platforms my specialities. Due to my special skill set, I have built a very strong network of very skillful investors whom I collaborate with. I know many of them quite well, and this makes their thoughts and their ideas very meaningful to me since I know how their minds work. So I try to keep my mind open. I spend a lot of time listening to other people and I constantly reflect on where I have an edge myself. I am very risk adverse and I'm very humble about what I might not know or what I might misinterpret. So I really want to know in and out why an investment is good. And I want to be able to explain exactly what the investors on the other side of the trade misunderstands. So being the fund manager and having the final call, I see it as one of my primary tasks to make sure that we have been around every angle there is to be listened to in the market about the investments that we're about to enter. On the investment team, I have recruited Alex Haag, who has a master's in finance from Amsterdam University. He's a very experienced investor and has an enormous network of both private and institutional investors. Alex is focused on underwriting the future. Alex knows a ton about alternative data, gaming, iGaming, live streaming, and just about digital business models. He, unlike me, has a classic economic and analytic background, which will give us a top-notch classical view on the stocks we look at. And also an understanding why people on the other side of the trades the way they do. Søren Gavn is director and co-founder of NewDeal Invest. He has built a doctor's vacancy agency called Medflix from the bottom and is now selling that, which enables him to focus entirely on NewDeal Invest. He is a board member and a business angel and a very experienced investor that loves investing, especially in companies that are creating the future. Søren is a great operational manager and will handle operations on a daily basis, besides helping with views, ideas, and research. Mike Vestergaard is partner in NewDeal Invest. He is a serial entrepreneur. He is a very strong researcher, and he has the entrepreneurial view on businesses. Both are extremely helpful for our due diligence process, and I've learned a ton from him already about looking at new and young businesses. So as you can see, NewDeal Invest is actually trying to do the same as the companies that we're investing in, trying to do things in a new and more intelligent way. So all there is to say is thank you for watching.